In this presentation, we will continue on with our comprehensive problem related to a not-for-profit hospital. The information is going to be on the left-hand side. We're going to enter that information and have been entering that information into the right side into the general journal, which we then post to the trial balance worksheet. We've been entering transactions and are currently on the number 7 at this point in time. However, in order to move forward, we're going to have to unhide some cells. So that's the first thing we'll do here. We'll do a bit of maintenance, that maintenance being unhiding a few cells. So you can see here we have from HI and then it goes to O. We need to unhide some cells in between there. So we're going to select column H, drag over to column O, let go. We're going to right click in that selected area and unhide. So we'll unhide those cells. Then we're going to hide I to M. I'm sorry, we're not going to hide I to M. We're going to hide the ones we have already completed, which is from E to F. And let's go all the way to I, E to I. Let go, right click those selected cells and hide them. So there we have that. Now we got our information on the left, the journal on the middle, and we're going to record that to the right. So next thing we're going to do is we're going to scroll down. We're going to ungreen number 6. So number 6 we're going to ungreen, and we are now currently on. We're going to be starting with number 7. So we're going to green up number 7. We're going to highlight number 7 and make that green. So make that green. So here we have number 7 where we have the supplies inventory balances. We're going to say that there's going to be a change from year 1 to year 2, and we're going to be reporting that change. So we got the supplies inventory balance in total. We could see the change here, and the ending inventory then is going to be that 90,200. So we're going to record, we're going to be taking the inventory account. So in essence, we'll be looking at the inventory account and considering the fact that we need it to be the 90,200. If we scroll up to what is in inventory, this is kind of like an adjusting entry. We see what is inventory at, it's at the 85,400. So if we subtract that out, we're going to say minus the 85,400, we have the 4,800. That's our adjusting entry. Now, we're going to be breaking that out, however, not to just cost of goods sold, as you might think if we were a merchandising type of company, but we're going to be breaking it out by these categories on the expense side of things, breaking it out between the administrative, the general, the nursing, and the other professional. So that's how we're going to break this information out. Therefore, we have the beginning and ending by category, by these categories. All right, so we're gonna record this in essence by the function then, rather than the class of expense in terms of just inventory expense. We're going to be recording it by the administrative expense, nursing services, and other professionals. So we're going to say this is going to be number 7, and inventory then is going to be increasing. So we have actually an increase in inventory. And then we're going to be picking up the expense side of things, which is going to be equal to the administrative expense is going to be down here. And then I'm going to make a formula in order to calculate what should go in these cells. So the administrative expense is going to be equal to, scrolling back down, scrolling all the way back down, we have the administrative expenses. We're going to subtract out the year 1 minus the year 2. And we're going to pick up the difference, that difference being the 1,600. Next, we're going to do the same thing for the nursing. So equals the nursing, scrolling down to nursing and service expense, enter. Then we're going to record the amount in L5, which will be equal to, scrolling back down in to our data, the general, we want the nursing, which is going to be here, which is going to be the nursing year 1 minus the year 2, and enter. So that's going to be the nursing. Then we're going to pick up the other. So other professional services, and enter. And we're going to do the same kind of formula, equals in L6, scrolling back down, picking up the difference in the other professional. That's going to be the 41,800 minus the 49,000, and enter. And that actually is going to be a credit. This one should be on the credit side. So we're going to pull this over. I'm going to put my cursor here and just pull it over to the credit side. Then I'm going to use the paintbrush to paintbrush the formatting back into L6. So I'm going to go to the Home tab. I'm going to be in the clipboard and select the paintbrush. Then I'm going to select that cell that is white to paint it to the correct color. Then we're going to pick up the general and general service expense. This equals, scrolling back down, the general service expense, and enter. Then we'll do our transaction here. Once again, this will also be a credit, I believe. So we're going to be in M7 equals, scrolling back down, and we're going to be picking up in the other professional services, the 41,800 minus the 49,000, and enter. Whoop, that's the wrong number, isn't it? So let's do that one more time. Equals, we want in the general, we're looking for the general, which is the 11,400 minus the 13,500, and enter. Okay, so there we have it. And then we're going to say that the debit is going to be the sum of the negative sum. This will be our plug formula, the negative sum of these numbers, and enter, which is the 4,800, which we also saw normally in an adjusting entry. They give us this ending balance in inventory, and we basically have to calculate to that ending balance. We already saw that process, which was the 90,200 minus, and you could think of it this one, the 85,400 minus the 85,400. That's going to be the 4,800. If we scroll back up top and you look at the inventory, here's the 85,400. That's the beginning balance. So that's the 4,800 here as well. Okay, so let's do this process. Let's record this out. We're going to record the inventory first. Inventory is going to be in cell Q6. Within Q6, we're going to say equals, scroll over to that 4,800 and enter. That brings this up to the 90,200. I'm going to scroll all the way back down again just so you can see that that 90,200 equals our ending balance in year 2. Scrolling back up, then we're going to post the administrative expense. The administrative expense, scrolling back down, we see the administrative expense here. We are in cell Q27, where we will say F2 plus F2, scrolling back up. We're looking for the administrative expense. There it is, the 1,006, and enter. Next, we have the nursing service expense. So we'll scroll back down and we'll pick up the nursing service expense. That's going to be here in cell Q29. Something's in it, so we're going to go into it with F2 plus, and then F2, scrolling back up to the nursing service expense. That's going to be here, that 2,900, and enter. Then we'll scroll back up and see what we have next. We have the other professional service expense. Other professional service expense. Here we have that. We are then in cell Q30. Within Q30, we're going to say F2 plus F2, and then scroll back to the other professional service expense. That's going to be the credit 7,200, and enter. So there we have that. And then we have the general service expense. General service expense, scrolling back down to pick up the general service expense. That's in cell Q28. Within that cell, we're going to say F2 plus F2, and then scroll back over and pick up the general service of the 2,100 and enter. So there we have that. If we scroll back down, we can see that we are back in balance given by the green zeros, and we can now go to the second component of number 7. So if we scroll back down, we have the number 7. We have this information up top, and then this is what we're looking at now, which says that the mortgage payable due in 1 year is the 545. So we're going to break out the current portion and the long-term portion of the mortgage payable. So it's going to be a liability type of account. This is going to be 7B. So we can see here that the mortgage payable is in essence a liability account. It is a liability account. And we had a long-term portion, a current portion. We paid off the current portion. Now we're going to be recording the new current portion of the long-term note. So that means that the long-term portion is going to go down. The current portion is going to go up. The current portion needs to go up. It has a credit balance because it's a liability. Therefore, the current portion is going to go up with a credit. So we're going to say the current portion is going to be increasing with a credit. So it's going to be on the bottom. And then the long-term debts is going to be decreasing with a debit. Now, of course, this is the same as a for-profit type of organization. Same kind of thing that we would have to do is break out between the short-term and long-term. We would need some type of amortization schedule in order to determine the amount of payments that are going to be short-term as opposed to long-term. And that would not include interest, the payments that we're going to make. And we're going to say that we've made that determination, and it has turned out to be this 545. So we're going to pick up that 545. That's going to be the debit. That's going to be the credit. Now we'll go ahead and post this out. So we're going to say the long-term debts. Let's scroll over to the long-term debts. If we scroll back down, we have the long-term debts, the mortgage payable. We are in cell Q18. So within Q18, we're going to say equals. Scroll over, pick up the long-term debt, the 545, and enter. So that decreases it. The other side, of course, going to the current portion. The current portion that's going to be due within a year is going to be here in Q17. Something's in it, so we're going to say F2 plus F2, and then scroll over to that credit of the 545 and enter. So that makes it increase in the credit direction, of course. Scrolling back down, we are then back in balance. Okay, so let's go back over. We're going to see what we have next. We are going to be on now number 8. So we'll say number 8. And then see what number 8 has for us. I'm going to ungreen number 7. Ungreening number 7, right click and ungreen. Then we're going to be on number 8. We're going to make that one green, so we'll green up number 8. So within number 8, we say that there's going to be an unrealized loss on investments. So if we scroll back up top, we have some investments. You'll recall we know that some of those investments we're gonna say that there's a gain or a loss on them. We can imagine stocks or bonds. As they increase or decrease, we're going to record then the unrealized gain related to it. So we're going to have these investments. They're going to say it's going down. So we made some bad investments, or it's just been a bad time period. It wasn't our fault at all. That just went down. And so we're going to say they're going to go up next year. This will be equal to the investment limited to use. And we're going to say that it's going to be decreasing because the value of them went down. We can think about the stocks market basically going down, the value of our investments going down. And that's going to be a credit to the 681. Then the debit is going to be going to the unrealized loss on investment, which will be equal to, scrolling back down, we're going to be picking up the unrealized loss on investment. There we have it. And there's going to be our transaction. So now we'll record this out. We're going to record the unrealized loss, the debit first. Scrolling back down, here's the unrealized loss on investment. We are in the middle column. We are in cell Q31. Within Q31, we're going to say equals, scroll over to, picking up the 681 and enter. So there we have that. Next, we're going to pick up the investment income limited to use. Investment income limited to use. We're going to scroll back up top. We got this item. We want to be in cell Q8. So within Q8, we're going to say equals, and we'll pick up the credit of the investment income limited to use and enter. So that decreases this one, of course. We scroll back down. We see that we are back in balance. Here's the effect on what would be similar to the net income. I'm going to scroll back through this slowly so you can see the numbers here. This is where we will stop for this session, and then next time we're going to go through and start with the closing process.